Dipan Mehta, Director of Elixir Equities, is with us now. Dipan, good morning. I first wanted your thoughts on PSU banks. That's the one area where you've seen a big rally. Yesterday, SBI was a stunning move, and I think 600 crores of delivery buying. Of course, yesterday was expiry, so some part of that was because of ARB unwinding as well. But your thoughts on whether these stocks are still good for more?
See, I think we are seeing a spectacular trading bounce in PSU stocks, and it's not unwarranted. Clearly, the credit costs are going to decline significantly, and the kind of losses which we have seen in the quarterly numbers for many of the PSU banks will get reversed from this quarter onwards. So the base and the alpha will look quite exceptional when these companies declare their results. At the same time, I think they're getting capital infusion from the government, and that also will enable them to increase the volume of business. And lastly, I think it's the valuations which go in their favor. So investors who are expecting that the valuation ratios, be it price to book or price to earnings, will expand, and they should, considering a lot of uncertainties out of the way, are betting that you will have a situation where the earnings also will expand and the PE multiple price to book also will move up, which is why we are seeing this kind of expectation that stock prices of PSU banks will move up. But these are, I think, end of the day, short to medium term type of moves. In the longer run, with a 3 to 5 year kind of a time frame, I still feel that private sector banks will outperform PSU banks, because once this particular move is over, the same problem which plagued the PSU banks will come into play, and eventually you will see their growth stagnate and flatten out as they lose market share to private sector banks.
Okay, well, in any case, a lot of these private sector banks like ICICI Bank, Axis Bank, etc. are sitting at new highs, but PSU banks are not too far behind. SBI is also at a new high. Dipan, hi, good morning. What about the autos? I mean, day after day, we're getting news flow of a slowdown in the sector, very high inventory levels. In fact, this morning, we have talk coming in that Eicher Motors, for the first time, is seeing big dealer inventory level build up at, the Royal Enfield front. How do you approach this space now?
See, I think depends upon the investor's mentality and the time horizon. Conventional wisdom is that if you want to buy into great companies, you have to buy them when they are in a bit of a trouble spot, and then you just hang in over there, and as and when the cycles turn, be it because of management action or because of external factors, these stocks then come around and you will see fantastic alpha as far as their profitability is concerned. It has happened time and again. You've seen in companies like Titan a few months ago, a lot of bad news surrounding the company, and then 2-3 good quarters and it's given a spectacular return. Same thing has happened in Page Industries also in the past, and many other such companies. So I think that both Maruti and Eicher Motors are great value creators. They are strong franchises, good distribution network, great brands, good technology, distribution. And eventually, I think the cycle in the auto industry will turn around. I think given the demographics, given that interest rates are going to move southwards over the next few months or so, you will see the interest coming back into auto. Usually the pent-up demand comes into play initially. Then the base effect is what is the key differentiator. So eventually, I think growth will come back to the auto industry and these two companies in particular. And at that point of time, you will see a spectacular rally in both these companies, and investors, who try to chase those stocks at that point of time may not get the best returns. But you have to be patient in the auto companies. You have to give them that typical 12 to 26, 24 type of month time frame before you look at investing, and be prepared for some ugly numbers, quarterly numbers over the next 2-3 quarters or so. And there could be some more price damage, but I think most of the negatives have got priced in. And if it's, in fact, if you ask me, auto is the perfect contra play at this point of time. And once some uncertainties are out of the way, I think you will see these companies also come back and start outperforming.
Okay. Dipan, the other stock I wanted to ask you was Mindtree. Will you sell into this confusion, or will you buy at the current distress?
So I wouldn't want to buy at these prices, but I wouldn't want to sell also, because whenever a takeover play is on, there's always a likelihood that you may get a higher price, and it has happened in the past. So I think best for investors to remain invested and see how the events unfold. And always the price of 980 is there, which L&T is offering. That's a good exit price for investors as well. And I would have thought that if L&T were looking at merging the company with L&T Info, that would be a far more positive outcome for Mindtree minority shareholders, because clearly in the tech field, size is of a great deal of importance when it comes to bidding for new projects, and various other strengths also get unlocked if two great companies come together. But it seems that that's not on the plans in the immediate future. And to that extent, I think prospects of both LTI and Mindtree would be a kind of subdued.
Okay. You briefly spoke about Titan and the fact that despite all the volatility, it's given good returns. Would you bracket Bata, Pidilite in the same category? Because these are the other two stocks that have hit new highs as well.
Yeah, absolutely. And just to carry that entire argument forward, that there are points of time in Pidilite and Bata where you had 2-3 slow quarters, and Titan as well. And if you had bought them at that point of time, you were getting 30-40% returns in the next 12 months or so. And these stocks have to be bought when the chips are really down. If you start chasing them when they are moving up as of now, then you may not get the best returns. I mean, one cannot expect Titan to give exceptional returns if you buy them at these levels. But if you're holding a Titan share, I think you can sleep peacefully and hope that even from these levels, you can get a decent return. And there's a lot of margin of safety because your entry point is extremely low. So that has to be the strategy when you're acquiring great businesses, that we cannot chase these companies, but from point to point, from time to time, there is distress, there are a few bad quarters, there are industry circumstances, and those are the best price points for such great value creators.
Okay, I know you haven't liked IT stocks, Dipan, but worth a relook. Today, of course, we'll have Accenture's impact on the stocks.
See, it's not that I don't like IT stocks, it's just that I feel that there are better opportunities in the market. I think the IT industry feels extremely happy if they are getting a double-digit type of growth rates, and they are fair because they compare themselves with other software companies globally. And for other software companies globally to get even double-digit type of growth rates is quite decent given the kind of environment they are in. Globally, GDP growth rates are between 2 and 4%, and if a company is growing at 8-10%, then that is great news from that economy's perspective. But in the Indian context, we want to buy into companies which can grow minimum of 15% top line. That's the benchmark. That's the filter that we use. And most IT companies don't meet that benchmark. I mean, in the good times, they can grow at 12-13%. And when the cycle is down, then their growth rate becomes completely flat. And with this kind of a scenario, it's not going to change over the next decade or so also. I think eventually they become like, like power companies, like any utility company. And because Indian IT companies don't have any IP play in them, they're not going to be great wealth creators as they have in the past. So it's just that we want to be underweight in the IT sector and look for domestic focused businesses which can deliver a minimum of 15% type of earnings and top line growth over an extended period of time, like 3 to 5 years. And that's when real wealth gets created. So as such, to sum up, IT is not going to be a great value creator or a great value destructor. It's a good defensive play. It did well the last 12 months when there was a lot of turmoil in the Indian economy and domestic focused companies. But as you see the economy coming back, as you will see lower interest rates coming into play in India, I don't think IT will outperform as much as it has done over the past 12 months.
Okay, actually, you've given us the cue for the next cue, which would be the Reserve Bank's monetary policy. Thank you very much, Dipan, for joining us with your take on a bunch of stocks. Have a great trading day and a great weekend. Okay, Dipan alluded to the fact that there could be lower rates and therefore a bump up for economy-facing stocks. The Reserve Bank of India's Monetary Policy Committee will meet on 2nd April, next week, Tuesday, and go on for the next couple of days. The rate announcement itself will come on April 4th. As always, our Citizens Monetary Policy Committee meets ahead of it to outguess and try and see what arguments the MPC will think about. Here are what they have voted. It's a 4:1 vote in favour of a rate cut, but only 25 basis. Nobody spoke of 50 basis. First, that question to you, Sajid. Cut or pause, and if it's a cut, how much?
25 basis point cut in our view.
Okay. All right. Okay. We need to see your board as well. Saveran, what are you expecting?
25 basis
25
point.
basis rate cut. Okay. Sonal?
Yeah, 25 basis point rate cut.
Okay. Fine. Shaumyo, what are you expecting?
We're expecting a 25
basis cut. Okay. Chairman, sir, would you disagree?
Yes, I would.
Yes. Okay, well, the chairman has a reputation of calling the market, calling the MPC right in the past, even when he is in a minority. Sajid, how many rate cuts are you expecting through 2019, counting April? 25, 50, 75?
Yes, including April, it would be 25 at most 50 basis points.
Okay. Well, Samiran?
It's 50.
50 basis. So April and one more cut. Sonal?
Yeah, 50
Okay.
basis points.
50 and one more cut in the future. Shaumyo?
50 BPS, but with a possibility of an upward bias if growth doesn't pick up.
But you are expecting the 50 to come on April itself?
That will depend on the rate stance.
Okay.
So that's an...
Dr. Sen, how much of a rate, how many basis points will rates fall in 2019? 50 basis. Okay, there is unanimity over here that a half a percentage point rate cut through 2019. Only on April 4th itself, 4:1, the expectation is of a 25 basis cut.
Okay, guys, get ready for more rate cuts. At least that's the word coming in from the MPC. Let's take a short break and get back to the markets in a bit. In less than 3-4 minutes from now, we'll get the pre-opening rates on your screen. Stay with us.